We're going to transition now and talk about your money. Are bonds the best way to invest your money, or should you move money somewhere else? Stewart Welch joins us from the Welch Group on Money Tuesday with some answers. Okay, now I know this question about bonds sort of generated from a viewer who sent you a question in their situation. And I guess the big question is, are bonds the way to go right now, depending on your age?
Well, I think this person was particularly nervous. What we've seen, here's one of the true facts. There are not many things that are absolutes in the investing business,
Right.
but one of them is if interest rates rise, the bonds that you own, whether bonds or bond funds, are going to go down in value.
Okay.
And so when you look out over the next 3 to 5 years, it's hard to imagine that we're not going to have rising interest rates. And that's going to spell headwinds for bonds. That's going to be trouble for bonds. So this particular person was concerned. They had a lot of bonds in a trust account. Should they sell those bonds and buy stocks?
Would you recommend that right now? And would this be true for anybody holding a 401k or portfolio? And let's say they're 50 years or older. You know, in terms of their allocation, should it be in diversification? Should they go towards more bonds, or maybe pull them back and put more in stocks?
Well, I think you divide it into two groups. So you have, let's call retirees. Retirees need bonds because they need a bucket, and let's call it bonds or CDs or money markets. They need a bucket that they can go to draw from to pay cash flow. And they need that bucket to be filled up with at least 3 years worth of cash flow. We'd like it to be closer to, say, 8 or 10 years worth of cash flow. If you're younger, then what bonds do is they tend to stabilize the portfolio a bit. So stocks are very volatile, bonds are much less so. So normally if they're younger, we'd want to say maybe have 20% in bonds, and as they begin to approach retirement, they may begin to add more to that bond allocation. But you know, just looking straight ahead over the next 3 to 5 years, I would think that bonds are going to have trouble making a lot of money. Now, I could be wrong, but the Fed has stopped quantitative easing. They did that last year. Right. They've indicated they're going to begin to raise the Fed funds rate this year. Again, headwinds for bonds.
Okay. Now, and again, though, now this depends on your age, but if you're retiree age, the bonds are safer. You're not going to lose your cash more than likely because it's still going to at least be there.
And you have to worry about returns. So you have to have the stocks to give you a chance to have returns, and the bonds are going to give you some stability in the portfolio.
If you are interested in getting bonds, the types of bonds, what types should you look for that are safer, good investments? And I guess that would hold true in terms of mutual funds that have bonds, because there's just so many.
Yeah, there are. I think, Mike, based on my outlook, and it's pretty pessimistic for bonds, I would tend to have shorter maturity bonds, so maybe 3 years or less, and I would move up in quality. So I would move up, make sure that I'm in investment grade. I'd probably be avoiding junk bonds at this point, and lesser grade bonds. So a little tighter in terms of your maturity, shorter, and higher quality.
All right, Stewart Welch, some good advice this morning. Thank you so much, sir. Appreciate it.
Thanks, Mike.
All right, still ahead, Madonna and entertainment news.